That's three guests joining in our studio who are members of the Gitanjali Express, which is basically a community of chartered accountants or CAs from Calcutta who have now settled in Mumbai. And to just give you a sense, Gitanjali Express is the daily express or the daily train that runs from Kolkata to Mumbai. So joining us now are Dipen, Sheth, Head Institutional Research at HDFC Securities. We have Rakesh, Sony, Director of the Black River Food Fund, and Sachin, founding partner of Lighthouse Fund as well, which is also a private equity fund. Morning, gentlemen. Dipen, I'm going to start with you first, considering that the markets have seen such a smart rally and more of a relief rally post the Fed actually not doing anything. What's your sense now? Do you think that there is more upside, considering that the uncertainty is possibly not out of the way, at least for the near to medium term?
Sure. So this is one event which was hogging up a disproportionate amount of channel bandwidth, so to say, across all kinds of news channels and media. So it's out of the way, but it's out of the way for maybe a quarter or 2 quarters now. And the Fed has been very clear in saying that they're going to be data dependent, as also they're going to be more cognizant of global macro risks, which is something, a little bit of a new development. One would have expected this development to happen, but it's there now in the print. So I would suspect that this is not just a mere kicking the can down the road for a quarter. They're going to be very, very cautious before they try to do anything that might destabilize markets globally, not just in the United States. So it's good times for emerging markets for a while at least. And within emerging markets, structurally improving stories like India, rather than commodity dependent blokes like Brazil or Russia and so on, should be very, very carefully, considered. And I think this is yet another case where people will figure out that stories like India should be on their investment radar. So I'm very happy with what's happened.
All right, Dipen, just a quick follow-up question then. For the year itself, at around the 7,750 mark that we hit earlier this year, do you think we have formed a base at least in the near term? I
would sincerely hope so, because now I think the chances of this base being broken, and again, it's a short to medium term, it's a relatively near term issue, but still, let me go out on a limb and say that the chances of this base being broken have incrementally reduced with this. So there is going to be a Fed hike at some point of time. I don't know whether in 3 months or 6 months from now, but and even so, they're probably going to take only baby steps. So at least liquidity and technical factors are completely in favor of your theory, yes.
Okay. The fact that, Dipen, that you mentioned about that argument that we are commodity importers and we are going to benefit if in case commodity prices decline even further. And that's something that the Fed brought up, that maybe China is a concern in words that they didn't directly say it, but China is possibly, global growth is a concern going forward. In that sense, India becomes a preference amongst the emerging basket, and then hence we see FII flows possibly return into India specifically, as opposed to the likes of the Brazils and the Russias of the world, as well as China, all of them which are facing their domestic problems.
Absolutely. India is as close to being a pure play as possible. This is one instance where integration with the rest of the world is low, and it's actually in our favor. And whatever little integration we have is on the export side, it's driven by high capability stories like IT and pharma. On the import side, it was that we are a large importer of oil, and we continue to be a large importer of oil. 78–80% of our oil needs are imported. And on both fronts, we stand to gain from the emerging turmoil. And it's only a matter of time before people figure out that you can't club all emerging markets in the same pack or paint them with the same brush.
So in that sense, with that idea in mind, where would you see the Nifty by December end? We had someone say that, 10,000 on the Nifty, rupee at 65. Are you as bullish?
So December 2015 is not something that matters for us. So we are looking at December 2016 and indeed December 2017. And if it isn't substantially up from these levels, I would be very, very surprised. I don't want to put a number and anchor your feelings with those of your viewers here.
Would it be a new high at least?
At least.
Okay.
All right, let's get Rakesh and Sachin as well. Rakesh, tell me, in terms of PE funding, talking about emerging markets, who competes with us in terms of PE funding currently? India is so much of talk. India has been the pick among all the emerging markets, etc. So currently, who do you all see as a key competitor, or are we a cut above the rest?
I think we are cut above the rest for sure. In fact, let me just share some numbers with you, and that will kind of startle you a lot. In the first 6 months of this year, we have attracted close to $15 billion in private equity, which is like almost 1.5 times of what we received in the entire year last year. So probably this year definitely going to be the largest in the history of India in terms of private equity. And the more and more you talk about India, the respect that we have now because of the government and because of the stability that, and especially what's happened in China the last 6 months, I think this is auguring very well for the country. And I see personally a lot of new funds coming up here and a lot of money going to come here in this year.
All right, where's the money going? Because we have been seeing.
So it's a very broad-based sector. Yeah, there are large transactions that has happened in the consumer internet space. I mean, the Flipkarts of the world and Snapdeals of the world are attracting a lot of capital. But if you see, there is a lot of money that is going to healthcare, financial services. We just heard about small banks yesterday, and you will see a lot of private equity chasing those banks as well. So it's a very broad-based investment now. It's just not about the high-tech industry, which used to be like 5-7 years earlier. Now you see, I mean, look at our fund, for example, focus on food completely. So we're going to be investing a lot of money in food sector as well. So the thing is that there are a lot of funds that has come into India. They're expanding teams. They're setting up a lot of offices here. I see the next few years going to be huge for private equity in this country.
Sachin, what about you? You're also focused on the food space or the consumer space to a large extent in terms of your private equity deals. What's interesting and how much of a rural focus do you have?
So we have largely been, as a fund, if you see for the last 8 years that we have been operating and investing in the country, our large focus has been on the consumption and that to domestic consumption in India. And one thing that we have seen typically, if you look at India and why India is actually a story today globally, vis-a-vis other emerging market, is that typically there are two parts of any economy in the country. One is, as we say, the capex economy, where you need to create the roads, bridges, everything that you need, right, to develop the infrastructure. However, every morning when you wake up, you need to still eat. You need to, wear your clothes. There is a certain domestic demand consumption story that continues, and don't forget that we have 1 billion people whose earning is every day rising. So what we have seen consistently is that the domestic demand continues. In fact, some of the investment that we have in the consumer space actually have grown 3 times, 4 times in the last 5 years.
What are those investments?
To name a few, we have an investment in a company called Unibic Foods. Actually, they make cookies. When we invested this company, 6 years was about 20 crore in revenue. And today, this is going to be close to 300 crore turnover this year. In 5 years' time, which country can give you a 15 to 20x returns, growth in revenue? So something that we have been very impressed as a whole. And apart from that, we have also invested in a company called Bikaji Foods. They make bhujia, snacks, everything. Evening, you see millions of people eating bhujias. So we see, I think that part will continue forever.
Would you recommend pharma stocks in that light as well? A lot of Indian snacks being consumed in the evening time, and hence maybe.
What about something with the snacks? I mean, UB or United.
That's on a lighter side, I guess. But see, if you look at overall, I think healthcare is a very big space. Large part of the Indian pharma story today has been export-led. We have not talked about the domestic pharma story as such. I think actually there will be a bigger opportunity in the next few years emerging even from the domestic market as well. Today, if you see, Abbott, which is the first, which is probably the #1 company, doesn't have even 5,000 crore turnover in the country, right? And think about it, for 1 billion people, right? And versus a $800 billion healthcare market in US. So we see a lot of potential there in India in the domestic space, even in the healthcare space going forward. We have an investment in a diagnostic space related to that in Calcutta.
Okay, let's shift focus a bit away from that. And Dipen, I listened to you very closely, and in terms of your recommendations on cement, and you've been fairly positive on that as well. We talk about infrastructure, we talk about smart cities, we talk about a lot of other things. Everything comes down to cement at the end of the day. A lot of these stocks, something like an Orient Cement, something like an Ultratech Cement, that you've been fairly positive on, they've corrected a goodish bit from the top. Do you think current levels are a good entry point? Maybe Ultratech Cement, it could be valuation-wise not very cheap, but going ahead, it's the big boy in there. So do you think entering these stocks at these levels is a good idea?
So when we saw Ultratech in the recent crack at about 28 or 100, we were quick to recommend it as at least a short-term trade, if nothing else. But with Ultratech and specifically with Ultratech, the great thing is that here is a company which is 2 years from now they'll be hardly leveraged. Okay, so as a commodity player, they're shielded. They're the single largest player. They're going to remain to be the single largest player. They should be up to more than what 75 or 80 million tons capacity by that time. And if there is going to be a structural shift in the way India consumes cement to build its infrastructure, whether it's housing, whether it's roads, whether it's urban infrastructure, railways, metro, you name it, dams, tunnels. So where isn't cement needed? So they will be magnificently placed with an all-India footprint, and even that all-India footprint had a few dark spots here and there, which are getting made up with their acquisitions, if not greenfields, right? So at maybe $190 or $200 a ton, you might say the headline valuation isn't exciting, but I'm saying 2 years out from now, you will find it very exciting if you see 3-4 years of very strong cement demand playing out at that time. So the story with Orient Cement is of a different kind. So Orient is in a place where, the bad impact of weak demand in the south is not fully felt by it because it's exposed to the west and Maharashtra markets as well. And the fact that it was setting up capacity, and which is, I think, about to be commissioned if it hasn't been commissioned already. So 5 going to 8. And headline valuations looking, and at a very affordable cost. Operating costs being probably the best in the country, maybe thereabouts with Shri or someone like that. So at $100, there's nothing to lose there. And even this $100 is up from $65 or $70 less than a year ago.
Okay. All right, that's on the cement space. We have a lot more questions, but we have to take a mandatory break. We'll be back and we'll continue this conversation on the other side. Stay tuned.
CNBC TV 18, celebrating 15 years.
The Nifty still holding with good gains at this point of time. It's hit a century in early morning trade. The Bank Nifty, though, that's really powering ahead. A triple century just to kick off trade with, and then, in fact, it's been building onto gains as well. But let's get back to our conversation. We have 3 gentlemen coming in with some Kolkata background as well. So I just want to put a question across to you, Sachin. In terms of Kolkata, as an emerging market destination, I mean, how does it fit in? Are things, looking bright? Are they looking up? Do you expect it to be a big powerhouse to reckon with going ahead?
I think it's a very relevant question in today's context. If you see, with the new leadership and their focus on the Northeast India, and also, the development that we're talking about, emerging development in Bengal, Bihar. See, Calcutta is the only metro, in that part of the city, in that part of the country. And I think, as you see the investment growing in Northeast India, I expect Calcutta to actually emerge as a gateway to the Eastern India. It's as I said, largest metro. More than that, what is happening is that the natural demand itself will catch up at some point of time, because the sheer number of population that is there in that part of the country, somewhere, will have to catch up with the rest of the country in terms of the development. And I see, Calcutta, being one of the biggest beneficiary of that. And the good part of Calcutta is the real estate prices are still under check. You still have the operating cost is probably one of the lowest in the entire country because of the number of manpower available, and general operating cost is pretty under control. That is something we see.
Okay. Rakesh, you've been involved in a lot of companies, even which are listed in terms of hitting the markets recently. Yeah. But tell us about your experience as a private equity investor. What do you look at when you invest in a company? What are the parameters?
So it's a very good question. I think and I have worked with an enterprise where we have followed discipline and systems for a long time. So 3 things. Whenever we look at a business, we divide into 3 parts. It's business, management, and valuation. So you need to first understand the business. Please don't do things that you don't understand. You come to India based on certain theories that were working in the US, and you think that will work in India as well. Doesn't happen. So you need to invest in businesses that you understand. You have to back the management. This country is all about entrepreneurship. If you back the right guy, half job is done. So in terms of weightage, I'll probably give 60% weightage to the management. We have seen that, businesses that are, look at telecom, for example. You have an Arcom, you have a Tata Docomo, you have an Airtel, and you have a Vodafone. They all are in the same business, right? But there is this differentiation between all of them. How do you run it? That is very, very important. And I think that is what a private equity guy needs to do. You need to have the gut, you need to understand the management behind the business. So I would say management, I'll give 60-65% weightage, about 25-30% to the business and valuation. Because if you don't buy right, you will never get your numbers right.
So how are people valuing e-commerce these days?
That's a very difficult question. I'm not capable enough to answer that question, because it's all about who is running ahead, I think it's basically throwing a dice, and you know that somebody will make money for you. It's like, running a race. And
trying to back
frankly, I don't understand that business, so I'm not the best guy to comment over it. But I think we just need to keep our fingers crossed as they are. So we all hope that somebody will probably, win the race one day or the other.
All right.
But great for the consumers like us, because we get fantastic offers. My wife is like half a day busy buying things on online. So they have been able to change a lot in our household. But let's see whether they will ever make money or not.
I feel your pain, Rakesh, and I'm newly married and I'm going through the same problem, and not too good at the start of the wedding. But anyway, Sachin, I want to come back to the point that you were talking about real estate. At one point in time, real estate used to be the poster boy of PE funding. Are you still seeing people come, PE funding headed towards real estate? Now you talk about valuations, being attractive. Some of these stocks have been absolutely, they've given you dismal returns. So do you still see some money moving towards real estate?
I am as such not the right guy to talk on the real estate. We manage, funds that do not invest in the real estate. However, in general, if you see what has happened is that real estate as a fund, private equity fund, has done fairly okay in terms of, generating returns for the investors, and actually has attracted a lot of capital in the recent time. In terms of, stock prices, I would not comment, because that is something that we do not cover, and that's not my line of activities. But as a sector, if you look at this, the economy has to grow. I think somewhere the equilibrium has to come. I think in terms of valuation expectations or investors' returns, typically what happens is that if you end up buying a stock, which is bought on a particular assumption of earnings, and if earnings do not come, suddenly the stock that actually looks, cheap on a day of buying becomes very expensive, when the results come. And I think to a large extent, something that has happened in the sector, and not only real estate, in many other sectors that has happened. And I think that is something that is correcting. The time correction is happening. The price correction has already happened. And I think with the time it will come back. The sector has to come back for the country to grow as a whole.
Okay.
Just to add to real estate, I think an important point I would like to mention there, that if you look at the private equity funds which are in real estate, they are basically project funders. They are not taking equity risks, So if you really look at, frankly, from an asset class point of view, it is probably one of the strongest asset class. You're investing in an e-com company, you never know whether you'll make money or not. But when you invest in a real estate, there is an asset underlying, and you will someday make a money. So most of the deals that have happened in the real estate in the last 5-10 years are all yield based. So you essentially make between 18 and 22% kind of returns on real estate investments, and a lot of capital is being raised.
Okay,
believe me.
So you see more money you can move towards.
It's more like a quasi-equity. It's not an equity. It's more like mezz and quasi, and there is a huge scope there, and a lot of funds are being raised in that space right now.
Okay, that's on real estate. But Dipen, you have spoken about Bandhan the last time.
Yes.
Okay, I think we just have to listen in to what Raghuram Rajan has to say. That's the governor, and we'll be back. To ask you about one MFI which is in focus, which is SKS Micro. Your thoughts on them not getting the small bank license? Do things change a lot for them?
I guess they do, and which is why the stock has got hammered today. But we don't have official coverage on them. We've taken a look at them recently, and we found them to be very interesting. We found the valuations less interesting, if I may add this. But we don't have a formal recommendation on them by way of any formal research or some such. But, the largest sense that I get is that it doesn't really matter whether SKS has got a license or not. They can still continue to do the business that they were doing and grow it. And there's tremendous potential. Even apart from small banks coming up, it's not that the microfinance industry is going to be so badly threatened by small banks that they can't grow. So there's a world of opportunities as you get into upcountry India, and with infrastructure getting created, with communication channels and roads reaching into far-flung corners of the country. The opportunity to advance credit to deserving borrowers, whether at a 25,000 rupee ticket size or a 25 lakh ticket size, and I dare say the 25 crore ticket size, is just expanding every single day. So I have a host of NBFCs and microfinance companies who may not become small banks, but who still have years and years of growth left.
Okay. All right, gentlemen, we've completely run out of time, but this was a very interesting conversation which could have gone on for longer, but time constraints have limited us. Thank you very much for joining in.
Thank you so much
and
for
taking us through all of your views in terms of private equity as well as for the markets. We'll take a break now.